All right, let's check the next question. In this question, please note that interest is not capitalized. Interest is not capitalized. Just write it next to question 3 there, that interest is not capitalized. So it's not added to the capital amount. They gave you extract from the pre-adjustment trial balance for the year ended 28 February 2018. We've got a loan from Kawanas Bank at 10% per annum, which is 700,000. And we have the entity obtained another loan amounting to 200,000 on the 1st of September 2017, which is pretty much in the middle of the financial year. The process of the loan were recorded, so they are included. The proceeds of the loan were recorded. So that means that 700,000 we got in our pre-adjustment trial balance already includes 200,000, because that 700,000 is the balance at the end of the year. And the fact that the proceeds were recorded, it means it already includes the 200,000. Get it? And then they told you that the entity pays 150,000 towards the principal amount on the 28th of February every year. So they're telling us we're going to have the current portion of the loan. And note that that 150,000, it's only towards the principal amount. It's towards the capital amount. It's not about interest. Remember, when interest is not capitalized, it'll be paid within 12 months. So it'll be included. It'll be paid basically within 12 months. It should be paid monthly in essence. But in this case, we made 150,000 rand. And then they say the loan repayments for the current year was not recorded. So that 750,000 does not exclude this 150,000, which was made right at the end of the financial year on the 28th of February 2018. That was not recorded. And now they say to you, the loan repayment for the current year was not recorded, the account for outstanding interest. So even though we are making payments of 150,000, that is towards the capital amount, we still might have outstanding interest. Obviously, I don't know how that will work. All right, I will first start with my timeline. Specify the beginning of the financial year and the end of the financial year and when the change happened. The change happened on the 1st of September. On the 1st of September, we got an additional loan. So we know that if we have 700,000 at the end of the year, there's no way that on the 1st of March, our loan was 700,000. How much was it? It was 500,000. On the 1st of March, it was 500,000. So if I've got 700,000 here, and there was an additional loan of 200,000, it means here, my loan was 500,000. Because I know someone might be asking, where did you get the 500,000? Normally when my students struggle with this, because somehow people think accounting is this weird subject that you cannot apply in real life, I normally ask them, okay, yesterday you were owing me 10 rand. Today you owe me 20 rand. And then I ask them one question. Okay, let me just put it this way. Today you owe me 10 rand. And this morning, you took cakes for 10 rand. Okay? You bought cakes for me for 10 rand. But at the end of today, you owe me 20 rand. How much were you owing me yesterday? That's what I'm basically asking you. This morning, you took cakes worth 10 rand. At the end of the day, you owe me 20 rand. How much were you owing me yesterday? How did you get that amount? That's what I did here. At the end of this year, we owe 700,000, but we took a loan worth 200,000 during the year on the 1st of September. How much were we owing at the beginning of the year? That 200,000 increased what we owed at the beginning of the year. So if it's 700,000, it means at the beginning of the year, we had 500,000. So when you add it with 200,000, it will give you what we owe at the end of the current year, which is 700,000. But note those 500,000, we only had it for 6 months. So when we calculate interest on it, interest is at 10%, it was given to you. When we calculate interest on it, we're going to calculate interest for 6 months because we had 500,000 for 6 months. After September, we didn't have 500,000. From the 1st of September onwards, we had 700,000. So we will calculate interest on that 700,000 again for 6 months. And that will be 700,000 times 10% times 6 over 12. So it was 25,000 plus 35,000. When you add it, it'll give you 60,000. Okay. Now, here is the difference between capitalized and non-capitalized. You'll realize that when you go to your statement of profit or loss, your interest paid is only 25,000. It means that this interest that we've just calculated of 35,000 was not recorded. So our interest was 25,000 that is given in the statement of profit or loss. But it's understated because in total it's supposed to be 60,000, meaning that we are missing 35,000, which is our interest on loan. It was not paid. Therefore, since it was not paid, we are going to include it as accrued expense, and that will be 35,000. When we record it, by the way, in your handouts, I did not include those. Okay, so basically this is just for working the balance of 500,000. We took a loan worth 200,000. We paid 150,000. So at the end, we are simply owing 550,000. Okay, and I will explain how we did that. Or let me just explain it. Okay, our loan was 700,000, and you were told there that the entity paid 150 at the end of the year. So it means at the end of the year, we were not owing 700,000. We were owing 700,000 minus 150. So basically, we are simply owing 550,000. And for our accrued expense, it is a liability, so it will increase on the credit side. And I will start with the balance carried down, but it will increase on the credit side with interest on loan, which is 35,000. It is a liability, and that's what we are going to carry to the next financial year. When it comes to interest, we'll owe 35,000. You see, there are two separate things. There's interest part and there's a loan part. They don't mix when interest is not capitalized. Okay. I will simply repeat the same account, but now I'm just going to focus more on doing the interest on loan. Please know that interest on loan that was given to us was 25,000. That interest on loan has been understated by 35,000. So we need to increase it by accrued expense, which is the interest on loan that is outstanding. And that will be 35,000. When you add these two, it will give you 60,000, which is your total interest expense. You would close that against profit or loss. Okay. All right. So when we record this under interest expense, we already had 25,000. You're going to add 30,000. It will give you a total interest expense of 60,000. Minus it from your profit before interest expense. You will get profit before tax, which is 128,000. And the non-current liabilities, your loan will be sitting at 550,000. However, that 550,000, and from that 550,000, we need to minus the portion of the loan that will be paid in the next financial year, which is 150, because they told you that it is paid on the 28th of every year. So that 150 will move from being non-current to being current, and non-current portion will just be 400,000. I just need you to note that we still owe Cabana Bank 550. It's just that the 150 part was included under current liability. And then we're going to include trade and other payables, but on trade and other payables, we include the interest expense that has not been paid, which is 35,000. Okay. Try this out. Please do it on your own and email me the answers, and then I'll mark you on that. Also,